Bill here with the Metals Minute. Today is Wednesday, October 19th, 2022. Well, we have the metals mixed so far this week. All the details are in the write-up. We have some new developments going on in the energy situation across Europe. Thankfully, there's been a milder climate and temperature so far this year, this fall. And so they've been able to refill their storage facilities to capacity before the November 1st deadline, which is typically the time they want to try to have those topped off. They've been able to do it quicker thanks to a lot of that American gas coming over and some of the Russian energy by way of China. So they're purchasing it from China even though it's Russian, and they're also purchasing American energy. So that's got them up to speed for the time being. 2023 supplies are more uncertain, so they're not completely out of the woods yet, but temporarily things have eased a little bit. We also have more announcements of strategic petroleum reserve releases as they're trying to bring those gas prices down. Seems like maybe before the election. The problem is they're draining our emergency reserves to the lowest point in over 40 years. So if we actually have an emergency, we could see prices go through the moon, or through the roof rather. But anyway, that's something to keep in mind. Speaking of the election, we do have a longer article coming out this week that analyzes probable results, what's likely and why. In terms of not only the election itself, but also the aftermath and the impact on the economy and precious metals. So we have that coming out. Keep an eye for that. It'll be out shortly. And then we have some other interesting things going on in terms of what are the hot points? What are the pressure points that are being felt by the average American? And it seems right now that they don't align with what the political talking points are. And so we have a disconnect between the American public and the political leadership and the messaging, not necessarily just one party, but the political messaging doesn't always touch on what's important to the public. And so that's having some interesting effects, and we'll see if they can get that corrected over the next 3 weeks before the election. We already have early voting starting in some places, so we'll see how that pans out. But there's a lot of other things going on right now. We have dollar strength on the international markets, and that's causing the higher interest rates have helped the dollar increase in value, and that's causing consternation among a lot of other nations because their currency levels have come down compared to the dollar, throwing a lot of their budgets into disarray. It's a good thing temporarily for us as Americans that are seeking to buy precious metals, because oftentimes there's an inverse relationship between whether the dollar is going up or whether it's going down, and it's like a seesaw with precious metals. So temporarily we have the dollar high. It's offering Americans a good opportunity to purchase additional precious metals. And we see the reverse phenomenon in other countries. We see gold prices at or near record highs in their own currencies, whereas in the dollar it's not. So we have an opportunity there. One of the macro analysts that I think is brilliant and has a lot of good information for us is Luke Groman, and he's out saying that in order to save the financial system, gold has to go much higher, because even though rates have been rising, real interest rates are still negative compared to the rate of inflation. And so while they're trying to reduce the impact of debt levels through currency manipulation and lower than real rates are negative compared to inflation. That's a way of trying to reduce the impact of the debt. Long term, the only solution is going to be higher gold prices. So that's an interesting thesis, and we'll talk more about it in the future. Thank you for tuning in. We appreciate your time today. Have a great rest of your week. We'll see you soon.